Ever wondered what happens when you swipe your credit card at the store? It seems instant, but there's actually a complex network of processes working behind the scenes to approve your purchase. From the moment you swipe, your transaction takes a fascinating journey through banks, payment processors, and credit card networks all in a matter of seconds. Today we'll break down the credit card transaction route step by step, so you can understand what really happens when you make a payment. Here's a basic flowchart outline for a credit card transaction process. The customer initiates purchase. The merchant swipes, inserts, taps their credit card, or enters card information online at a merchant's point of sale, POS, or payment gateway. The merchant sends the transaction requests through the POS system or payment gateway, sending the transaction details to the payment processor. The payment processor sends the transaction information to the appropriate card network, Visa, MasterCard, American Express, etc. The card network sends the transaction details to the issuer bank for approval. This is the bank that issued the credit card to the customer. The issuer bank checks the cardholder's account for available funds and fraud detection. Based on this, they approve or decline the transaction. The issuer's response, approval or decline, goes back through the card network, then to the payment processor, which notifies the merchant. If approved, the transaction is completed, and the merchant provides goods or services. Settlement. The acquirer sends the approved transactions in batches and funds are transferred to the merchant's account, typically within a few days. The issuer then bills the cardholder. Now, what is a real merchant credit card processing account? A real merchant credit card processing account is a specialized bank account that allows businesses to accept payments via credit and debit cards from their customers. This type of account is set up through a merchant services provider, sometimes called an acquirer, which connects the business to the broader payment processing network. Here's what defines a real merchant credit card processing account. Merchant services provider. Acquirer is the company or bank that sets up the merchant account for the business. They act as an intermediary between the business, card networks and the customer's issuing bank. Settlement of funds. Once a card transaction is approved, the funds are held by the acquirer and then transferred to the merchant's regular bank account, typically within 1 to 3 business days. Security and compliance. Merchant accounts must comply with PCI DSS to protect sensitive cardholder information and avoid fraud. Some businesses use aggregators like PayPal, Square, or Stripe, which offer simplified payment processing but do not provide each business with its own dedicated merchant account. Instead, they aggregate multiple businesses under one large account. A real merchant account gives a business more control, better rates, especially for larger businesses, and more comprehensive customer service. With a real merchant account, the business gets its own unique merchant identification number, MID. This provides greater autonomy and control over processing terms. Real merchant accounts often offer lower processing rates, especially for businesses with higher sales volumes. Merchant accounts offer customized solutions, such as specialized payment gateways, higher processing limits, and advanced fraud protection. Businesses with real merchant accounts deal directly with their acquirer or processor, which often results in better customer support. This direct relationship means faster resolution of payment issues or chargebacks, while with aggregators, you're dealing with a third party that may take longer to respond or resolve disputes. Real merchant accounts often allow businesses to negotiate processing fees based on transaction volume and risk level. Also, real merchant accounts allow businesses to accept a wide range of payment methods, including credit cards, debit cards, gift cards, and ACH payments. This flexibility is particularly beneficial for businesses that want to offer multiple payment options. Merchant accounts often provide seamless integration with a wide range of POS systems, accounting software, CRMs, and other business management tools. This level of integration helps streamline operations, automate tasks, and improve efficiency. As your business grows, a real merchant account can scale with you, offering customizable payment solutions, lower fees, and features like high-volume processing. While aggregators are convenient for small or new businesses, real merchant accounts provide long-term advantages such as better control, lower fees for high-volume transactions, increased security, and more flexible, scalable options tailored to the business's needs. Thanks for watching. If you enjoyed this video, be sure to give it a thumbs up and subscribe to the channel for more content like this. Don't forget to hit the notification bell so you never miss an update. I'd love to hear your thoughts in the comments below. And if you have any questions or topics you'd like us to cover in future videos, let me know. Thanks again for tuning in, and I'll see you in the next video. Bye for now.